All right, so if you're into Forex trading, you know there's this one question. It gets everybody at the beginning. It feels like if you can just get the answer, you found the golden key, right? Well, here's the thing. It's a total trap. So let's dive in and figure out why.
Seriously, every single new trader asks this. It's the million-dollar question, isn't it? That one little secret that's going to unlock the markets and make you rich. But, and this is a big but, asking the question in the first place, that might just be your first mistake.
Okay, so to really get why asking which is best is just the wrong way to think, I'm going to tell you a little story. It's a classic cautionary tale, about a trade that looked absolutely perfect right up until the moment it blew up in spectacular fashion.
So, put yourself in this trader's shoes. You're staring at your screen and bam, there it is, the perfect setup in the British pound versus the US dollar, GBP/USD. I mean, the charts are beautiful, the patterns are crystal clear, all your indicators are flashing green. You're thinking, this is it. It doesn't get any better than this.
And that excitement? Oh, it's real. Your heart starts pounding. You're already imagining the money just raining down from the sky. You're probably already composing the victory tweet in your head, maybe even taking a selfie with this massive grin on your face. You're about to be a hero.
So you click the button, you place your trade, feeling like a genius. And then, bam! Disaster. The market just screams in the opposite direction. We're talking a 100-pip move against you in the blink of an eye. And a pip is the tiniest price change, so 100 is huge. Your perfect trade? Gone. Vanished. Your account is bleeding. You're just sitting there thinking, what on earth just happened?
Well, here's what happened. The answer was in what you weren't looking at. See, while you were mesmerized by those pretty charts, some massive, market-moving news dropped. The UK and the EU basically had a huge public breakup. You were so focused on one thing, you completely missed the fundamental story, and man, did it cost you. And this whole mess, it leads us right into one of the biggest fights in the trading world. This kind of catastrophic mistake happens all the time, and it's usually because new traders think they have to pick a side. They feel forced to join one team in this, endless war between two totally different ways of thinking.
And I'm not kidding. It really is like two armies dug in on opposite sides of a battlefield. Over here, you've got Team Technical. These are the chart wizards, the purists. And over there, you've got Team Fundamental, the people who live and breathe economic news. And let me tell you, these two camps, they do not play well together.
The hate between these two can get pretty intense. You've got the hardcore technical guy saying, oh, fundamentals, that's useless. It's all already baked into the price. Then you have the hardcore fundamental traders who just laugh and say that technical analysis is nothing but useless fake voodoo magic. It's a complete stalemate. But here's a thought. What if they're both wrong? What if they're both missing something huge?
Well, it turns out there is a third piece to this puzzle. It's the one that most people forget about, and it's the piece that changes the entire game.
And that piece is called market sentiment. Now, sentiment analysis, it's not about charts and it's not about economic data. It's all about figuring out the mood of the market. Is everyone feeling super optimistic and ready to buy everything in sight? That's bullish. Or is everyone scared, pessimistic, and hitting the sell button? That's bearish. It's basically the collective gut feeling of every trader out there.
So think about this for a second. This whole war we talked about, Team Technical versus Team Fundamental, what if it's all just a huge misunderstanding? What if the whole fight is based on a completely wrong idea?
Yeah, what if they're no enemies at all? What if they're actually partners? What if they're supposed to work together?
And that idea brings us to a really powerful way of looking at this. It's a metaphor that just reframes the whole conversation. Okay, I want you to picture a three-legged stool, right? One of those legs is your technical analysis. The second leg is your fundamental analysis. And that third leg, that's market sentiment. Now, what happens if you try to sit on a two-legged stool? You fall flat on your butt, right? For that stool to be stable, to actually support you, you need all three legs, no exceptions.
So let's break down what each of these legs actually does. Technicals, the charts and trend lines, that's all about your timing. It's perfect for figuring out the best spot to get in and get out of a trade in the short term. Then you've got your fundamentals, the big picture stuff like GDP, inflation, employment reports. This tells you the long-term story, where the market is probably headed over weeks or months. And finally, sentiment. This tells you what's happening right now. What's the mood? A great tool for this, by the way, is the COT report, which shows you what the big banks and hedge funds are doing. See? Each leg has a totally different but super important job.
And here's the magic of how they all connect. It starts with the fundamentals. Some big economic news drops, like an interest rate hike. That news shapes the sentiment. Suddenly, everyone is either greedy or scared. And what does that sentiment, that emotion do? It creates the very patterns you see on the charts. So it flows, you see. Fundamentals drive sentiment, and sentiment shows up on the technicals. Once you get that, you can build a trading plan that is so much stronger and more complete.
Okay, so let's bring it all home. What's the big takeaway for you? How do you actually use this stuff?
You know, there's a line from the source material that just nails it. Take out one or two legs of the stool and it's gonna be shaky, right? It's so simple, but it's so true. If you're only using charts or only using news, your foundation is wobbly. You're just setting yourself up to get blindsided, exactly like that trader in our story.
So the goal here isn't to be the world's best technical analyst or the world's best fundamental analyst. The real goal is to become a balanced trader, someone who knows how to pull all three tools out of their toolbox and use them together. You want to be a three-legged trader.
And really, that leaves us with a final thought, doesn't it? When you think about it, ignoring any of these types of analysis, it's like deciding to go into a fight with one hand tied behind your back. Just why would you do that? So forget about asking which type of analysis is best. The question you should be asking yourself is, am I using every single tool I have to win?